great for joining us. Thank you very much. We'll keep this panel very simple. We're gonna start with an introduction, and then we're gonna go into a little bit more depth around what is a real-world asset, how are we gonna digitize it, and how we're gonna leverage it on whatever chain it goes on. Of course, we're here with Cardano. Could you just give us a quick brief, please, about what you do and the environment that you work in?
Sure. So hi everyone, my name is Yosuke Yoshida. I'm from EMURGO, which is one of the co-founding entity, also structuring Cardano. I've been here for 6 years, and I'm in charge of the Middle East and African region. We do the commercialization side of Cardano, which means investment, advisory, and some development stuff. And we also have several products going on. Maybe I'll talk about that later.
Okay, awesome. Thanks very much. Just a bit brief for myself. So I am the co-host of Encrypt-d. I would say it's in the top 1 or 2 podcasts in the region for crypto, considering there are only probably 1 or 2 anyway. So the reality is I work in the real world. So my day job is running a company called UDrive. It's a pretty well-known company here that does car sharing. So it is physical, real-world assets operated on the streets and fractionalized by the minute, the meter, and the liter. Obviously, Encrypt-d is the podcast, and then of course, I'm a co-founder of a cloud gaming company that is leveraging blockchain and crypto as well. So there's the blockchain and crypto component. Okay, so let's start with what is a real-world asset? Go for it.
Okay, define real-world asset.
Yeah, define it.
Okay. Well, it's been a hot topic, and actually, it's a broad term. Maybe some of the, when we say real-world asset, it's somehow covering what we've been talking about security tokens. I would say it's a little bit wider term, or broader term of something that we want to tokenize. Not only securities, but broader whatever assets in the real world. That's what we are sort of talking about when we say RWA, real-world asset.
So is a real-world asset something you can touch? Or is it something that is technically not connected to blockchain and crypto at the current moment?
Good question, and it should be both. It should be something digital, something just on papers, or something like real, like solid stuff, like what you're doing.
Okay, so like if you tokenize a human being, that would be a real-world asset.
A human being?
Yeah, why not?
I think so, yes.
Okay. Okay, so I guess let's set the frame for what happens to a real-world asset in the real world. So anything that is physical probably has been financed. Anything that is physical has an owner of some sort. So you've got 2 things. You've got the financing. You've got the who owns the item. So obviously in the real world, if I gave you my phone right now, you now own my phone because you physically have it in your hands, but I am financially responsible for it, right? Okay, so let's set the stage there. This then revolves around regulations, law, the jurisdiction you're in. Are you in the UAE, but your asset is somewhere else, or your asset is trying to leave your jurisdiction and go somewhere else? So that obviously sets the stage for the second component of an asset, which is who owns it, who finances it, and how did it get financed? And then how does it move? So obviously we're going to blend this into how blockchain and crypto, and of course what you're doing in your role and what Cardano is doing. How can we take the current real-world assets and just simply make a digital version of it? Assuming it is a physical asset already, so it has an ownership and somebody has custodian of it.
Depends on the asset, but like it's already happening in gold or real estate. Real estate might be the easiest one when not a lot of people can afford like 10 million worth property. It's big building, but like if it's fractionalized into small pieces through the tokens, now people will be able to afford it, and yeah, like that provides more liquidity, of course, more transparency, more efficiency, because the execution of the payment will be made through smart contracts. So yes, that's the whole purpose of it.
Okay. Let's take an example that you're currently working on. So you're working on a couple of projects.
Yep.
Can you just explain quickly the 2 projects, and then maybe lead into how you've taken sort of a real-world asset and you've basically tokenized it?
Okay. Yes, as I mentioned, we are working on several projects. One of them is a climate finance project, more specifically talking about carbon credit trading using tokenization. So actually, it's a real-world asset, carbon credit tokenization. The other one would be SME lending, also trying to bring in DeFi. So the lending, but the loan would be somehow tokenized. That's the second one. So yeah, those are two projects.
Okay, so on the carbon credits, where are the credits themselves, the real world asset, where are they custodianed? Who is centralizing that?
So we have a partner who has already built up this platform on the Web2 side. They're already dealing with big enterprises, big buyers, big sellers, but they're not being able to make it in the smaller pieces. They're dealing with like, okay, this, I don't know, Toyota wants to buy $3 million or $5 million worth carbon credit, and the seller means whatever, a power plant or something. They have this $5 million worth carbon credit. They're just kind of connecting one-on-one, the $5 million deal, right?
Okay.
And that's it, basically. They're doing a lot of B2B kind of business, but it's not opening the door to everyone. Like, I might want to join this, whatever, business, carbon credit business as an individual. I don't want to pay $5 million for this, but like, then that's what we are trying to do. By tokenizing this, like, I'll be able to participate by like each one token to join this to join this game.
Okay. So on the tokens themselves, like USDT, right? A US dollar goes into a bank account somewhere under USDT, and then USDT issues a new USDT,
yes.
And then there's now the digital version of the physical real-world asset, or the digital real-world asset. You have the same setup for the carbon credits.
Kind of,
predominantly,
yes,
right? Okay. Well, I assume that there's a backing of a credit over here for the digital token value, right?
Yes. There's a physical whatever contract or something that will be fractionalized and kept in some custodian or yes.
Okay.
Exactly.
And anybody can own the token. From your point of view, there's no regulatory hurdle between who owns the carbon credit token?
Depends on the jurisdiction. Actually, we haven't really announced the name of this protocol, so it's still I'm not saying the name. That's why I'm not saying the name. But depends on the jurisdiction where we set up. Of course we need to go to the KYC, and the level of KYC differs from how we set up the entity. Yeah.
Okay. Okay. So I think from the concept of let's say going from real world to blockchain a blockchain-based token, right? Because it's already digital to carbon credit. It's physically in a computer saying it represents something else in the real world, right? So we've gone to being able to allow easier movement across the market. So obviously in the regulation space, the biggest issue we have today is I own the carbon credit. I'm a UAE resident. You want my carbon credit. You're from Japan, for example, and you're a resident of Japan. And I have regulations on selling a security, let's say, and you have regulations on buying a security. So technically, we may not be compatible in selling. So if it's a token that has basically no borders and is sitting on a chain where it can just go and go to another wallet, we might have broken security rules, right? We might have broken regulatory requirements in my country, maybe not in yours. So I think the biggest issue we have today is we can easily digitize. I think custodian of something is based on trust anyway. So if a brand you trust is holding that asset and there's a token representing it, that's now the easy part, I think, right? The hard part is building the marketplace to acquire and buy and sell these assets, or these assets, and then whether it should transfer across borders or across ownership. Do you have any thoughts around? Obviously, you come from a mature market as well, so the fact is there are rules and regulations to protect normally investors and maybe some people that shouldn't be protected, but anyway. So what are your thoughts on this?
Exactly, that's a very good point. So even the same kind of, let's say, this carbon credit originated from somewhere, if you send it to a United States citizen, that might be, not really regulate. Could be some extent not possible for those people to buy. But if you sell it to someone, I don't know, somewhere in Asia, same asset, but since the buyers are living in a different place under different jurisdictions, it would differ. That's why we have to go through all the KYC, where you're from, which jurisdiction you live in. It's not only about the selling side, but we also have to take care of the buy side. That's why this is not only about RWA, but like that's why this KYC is becoming important for this entire blockchain space.
Do you guys have any reports or idea on how much? Let's say we just tokenize the world right now, right? How many assets are just waiting to be accessed by the billions of people, but on a cent or a dollar basis?
Last year, Boston Consulting Group made this analysis that real-world asset market could hit $16 trillion, might hit maximum 16 trillion. Means, Bitcoin is still 1 trillion somewhere around. Yeah. Even gold is like probably like $10 trillion, right? So, by 2030, by the way. So it's another 5-6 years. But if it's gonna be $16 trillion, if like whatever BCG mentioned, it's gonna be massive.
Yeah. So obviously, there's a lot more people holding $1 than there is people holding $1 million, and then the people holding $1 billion, right? So if, let's say, the whole world was digitized right now, your car, you own you own the whole car, but you could technically sell a bumper, a portion of it, that represents, let's say, 5% of the vehicle. You could technically have someone buy it, and then, they can always take it, claim it if they wanted to. Which assets do you think are coming online faster right now?
Of course, the assets that been traded in the Web2 space already, like gold or debt, bonds, securities would be the one that already have been traded. Might be more fractionalized or a little bit more easier access cross-border, but those are actually already starting a lot. So, yeah.
Yeah, because obviously, look, the commodities market seems like quite a simpler market to start with. It's already taken physical goods and digitized it, and then now it's just another layer of blockchain and crypto, and obviously the KYC that comes in with it. There is one underlying issue for people that are in the crypto space. Everybody likes to see things go north, right? They like to see you buy a token at 30 cents, and suddenly it's worth $30, and now I'm a multimillionaire on digital paper. The moment you start bringing in real-world assets, technically, I mean, why would the value of the token go up? It wouldn't, right? Unless the market itself has gone up. So people who are chasing RWA, which is the new hot topic, real-world assets, although they've been around longer than virtual assets, what's going to happen? Is it going to be enterprises mainly doing this, or is it going to be individuals? Is it going to be a blend?
Of course, it's going to be a blend, but I think it's more about bringing in individuals. For example, like, okay, I have one of my activities would be role on the VC kind of activity, venture capitalist. So I have access to those non-listed stocks, like pre-listed stocks, right? For example. But like not a lot of people, probably 99% of people do not have access to that non-listed or pre-listed stocks, right? Once, for example, this is the easy one to imagine. Like, once this RWA happens, expands, and probably a lot of non-listed, unlisted companies might want to tokenize their share. Then that's a massive market where no individual was ever being able to step in. So, and actually, it's a very interesting market.
When does RWA become the difference between a DeFi activity and more like an ownership activity? So obviously, look, if you have an asset, again, you have to finance it. You might do it in cash, you might, whatever it is, and then somebody owns it. Obviously, DeFi is transferring ownership amongst people or fractionalizing it, and it's also financing with some aim of making some money by doing so, right? Is there going to be a situation where people will just own stuff, like a piece of paper that represents an asset, but it won't necessarily go into DeFi, it'll be some other sector, like blockchain ledger for real estate apartments and stuff like that? Are people going to be building projects on top of that that are DeFi related?
Okay. The RWA is a broad term, DeFi is a broad term, so it's a little bit difficult. But maybe if I narrow down to RWA to something, let's tokenizing a real asset, and DeFi something like more like a lending protocol kind of DeFi. Let's put it like this way. The connection would be, for example, on the DeFi space, it's now really within the DeFi space. You know, it's not really connected with the rest of the world, the Web 2 or traditional side of the world. And like, for example, when we say collateral in DeFi, it usually means crypto or stablecoin, whatever. Web 3 kind of asset is the collateral that we bring into the DeFi protocol to borrow money, right? Like that's $1 million worth. I'm Cardano ADA, and then I borrow whatever 500K US dollars or something, right? That's DeFi, right? And it was always difficult to connect the real world asset as collateral, but once this real world asset is tokenized through this RWA, now this asset can be used as collateral because this is somehow crypto, right? It's much easier to connect this RWA, means the real world, and the DeFi space. So RWA is somehow becoming the connection of the traditional world and the Web3 space.
So if you took all your life experience and your blockchain and crypto and your network right now, where would you say, from a jurisdiction point of view, is the most open to taking a physical asset and tokenizing it and allowing it for global consumption?
A jurisdiction?
Yeah.
Yeah, actually, one of the possible places here, or otherwise Abu Dhabi. That's where we are talking with. But yeah.
Singapore?
Singapore, maybe.
Yeah.
Actually,
UK?
we do have entities and some offshore entities as well. But yeah.
You see the UAE bubbling up very quickly?
No, they're very flexible on what we are doing, and from the global recognition, it's a nice place to set up the entity.
If you were to get everybody in this room to buy $1 or $100 of a tokenized RWA, where would you tell them to go first as a life experience? Not to make money, but hey, you should try and go and buy a real-world asset on chain. Would it be one of the commodity-based real-world tokens on gold or anything else, stocks? What would you suggest?
If I suggest someone to,
it doesn't have to be a name, but it could be anything. You know, there's a lot of options. Let's say on gold, for example, there's a bunch of tokens you can buy out there that are attached to real gold.
Right.
Would it be to start there, or it would literally just go to one of the stock exchanges or the exchanges that have a tokenized representation of a public stock?
I don't know. Depends on whatever you're interested in. But like starting from real estate might be interesting. That wasn't not possible without the fractionalization of the real.
How many years do you think it's going to take before, let's say, 10% of traditional assets, real estate, companies, stocks, is going to be tokenized?
Well, again, if the report of BCG, I mean 16 trillion by 2030 is correct, 16 trillion is going to be around 5 to 10% of entire asset, including, obviously, the real estate is the biggest, maybe the stock is the second biggest, but probably like 5% or more. Okay. So 5%, pretty significant. Yeah.
Fine, okay. Does anybody in the audience have any questions for us? Anybody trying to tokenize a human being in here? No? Why not? No? Anybody tokenize an asset they own? No? Okay, I guess we've got a long way to go if there's nobody in the room here doing... Oh, we have one guy. Okay.
What were the jurisdictions that you said might be open to, I guess, digital assets?
Well, I think he mentioned the UAE. I mentioned Singapore, because obviously there have been environments where that's happened. And in the UAE, he said Dubai and Abu Dhabi. Obviously in Europe, there are some jurisdictions that are embracing it. I know from my perspective, being here 20 years, that I would probably, because I live here, probably try to make it happen here. Other markets are a little bit foreign, more foreign to me, naturally. From yourself, if you had to choose one and bet on it, where would it be?
Be Abu Dhabi.
Abu Dhabi?
If I have to choose today.
Right. There are a lot of things going under the radar right now inside the market between Abu Dhabi, Dubai, VARA, etc. So it is percolating, it is coming through. Anybody that's been here long enough probably knows that eventually the UAE is going to become the trade hub for something else that's not physical. Right now, the nation is built on trade, whether it's pearls or oil or gas, etc. As things become more digital, it's very, very likely as a nation of traders, they will be the trader of knowledge, of information, of digital assets, etc. And that'll just be the next wave of movement of value, let's call it, without physical borders, which will obviously create far more economic release for the market. Trust me, I would rather be able to transport people, teleport them from there to there without a car, but unfortunately, the laws of physics do not allow me to do that today. However, one day it would be very, very nice. So we just do that with fractionalizing a real-world asset with a mobile app. Okay, thank you very much. Any more questions? Oh, we got one more question.
Just a quick one. Moving from the physical world into space such as services or intellectual property or financing of lawsuits, is it something that you also consider as a viable underlying asset for tokenization? Thank you.
You mentioned intellectual property and...
all sorts of things that are not physical.
Things that basically never started in the real world. The real world is in your head, effectively, right?
Exactly, because, I mean, physical world has obvious limitations, right? So, but the non-physical world, intangible world of services, everything that basically has the, well, positive cash flow, something that basically generates cash, potentially can be tokenized, right? So, I mean, we're talking not about cars or physical beings or anything else. I mean, this is like a small piece of what potentially can be tokenized. We're talking about things that are intangible, right? And this is, well, what do you think? I mean, is it more interesting rather than basically trying to tokenize a human being?
I'll just hint quickly on it. I think the concept that people's brains can come up with unlimited number of ideas effectively creates unlimited potential. No matter what, in today's world, anything that's in your head is in your head, and anything that comes out of your head has been paperized. Otherwise, it doesn't exist. At least it doesn't exist from a point of view between you and someone else. Like you tell someone an idea, and they copy it, tough. So you have to paperize it, or you have to, let's call it document it. I guess from a point of view today, you physically have to write it down, or you have to type it into a computer, gets stored in the document gets ratified or verified as the original source of the documentation, and then it goes off in its merry digital journey around the world, and anybody who uses that knowledge should be paying a premium from the IP perspective. I guess when you have brain-computer interfaces, if you think of an idea, it gets digitized by the computer, and then it gets locked in a smart contract, and now your brain has been twinned, right? I don't know how to answer the question. I don't know if you have any ideas on this. I'm sure in Japan they're doing some crazy stuff.
Yeah, that's a difficult question. Like, yeah, of course, like as you mentioned, if it's a goodwill, it should be somehow calculated the valuation of a company. So even it's not tangible, it's within the price. So yeah, and as you mentioned, if it's just your idea, just sitting inside of you. Yeah, but it's an interesting space that we should explore, and then we will be exploring, I guess.
One thing for sure, if it's something that generates profits, and it exists in a paperized space, it has equity, it has value, so it's probably got a registration. That was my cutoff point. So, yeah, sorry, well, maybe we'll talk afterwards if you have more questions. All right, thank you very much for joining the panel. Thank you very much.
Thank you.
Oh, cheers.